You can see that Bitcoin to gold is maintaining its uptrend. We'll see if it breaks out. I think the risk-on trade has helped it recently.
Cathie Wood dives into Fed dissent, rate cut predictions, and crypto's future. Big moves ahead. Let's hear her take.
Metals to gold chart is, copper's been pretty strong. It's other metals that have been dragging this index down. Here's the S&P price to gold. This we're paying a lot of attention to because some of the best strategists out there, our friends at GovCal, have been suggesting that we were going to spiral down into a 70s environment with tariffs causing inflation and so forth. The market's been weighing that risk, as you can see here. The most recent move, however, in this index has been up, and we think it will resume as we get through this uncertainty, especially the uncertainty around recession and the Fed. Here, relative to oil, we think this is a leading indicator of what will happen, and it looks nothing like it did in the 70s. Here, I always like to keep this chart in mind. I started my career really near the peak of interest rates and have been riding down the curve throughout my career, which was delightful. But you can see there's a downtrend, which is good up to a point. What did near 0% Treasury yields mean? It meant, in the case of COVID, are we going into a deflationary bust? And we got out of that. And maybe we have just bounced back to something more normal now that the Fed is letting markets work. We do think that the Fed is actually erring a bit in the other direction, as I mentioned before, and that will change. And with it, we do think interest rates along the entire yield curve will come down. This is a measure of risk, and as you can see, up until yesterday, the bond market, as measured by high yields relative to 10-year Treasury yields, didn't have a care in the world. Everything seemed fine. Well, this metric has jumped by a large amount today. I think it's 5 basis points, which for this metric is a large one-day move. And as you can see, in late 2007, it didn't seem like this metric was paying attention to any of the warning signals around housing out there until it did. Now, what could those uncertainties be? Well, as I mentioned before, we still have to figure Chinese and Mexican tariffs out. So that is an uncertainty. And of course, the Fed. If the Fed continues to rail against President Trump because it wants to preserve its independence, despite the fact that housing's relapsing and inflation is under control, well, that could be a problem as well. It would be the opposite problem of the one that many accused it of. I mean, it'd be the same problem, just waiting too long as it did after COVID.
Robert Kiyosaki, the best-selling author of Rich Dad, Poor Dad, is making headlines again. And this time, he's rooting for a crash. Not in the stock market, but in Bitcoin. Kiyosaki recently tweeted about the so-called Bitcoin curse, referencing speculation that August could bring a major price drop for the world's leading cryptocurrency. He's not worried, though. In fact, he hopes Bitcoin dips below $90,000 this month. Why? Because he sees it as a golden opportunity. Kiyosaki has always been a strong advocate for Bitcoin, calling it a hedge against inflation and reckless government spending. He believes the real problem isn't Bitcoin, it's the U.S. economy, bloated with over $30 trillion in debt. He blames the Federal Reserve and Treasury for printing money endlessly, weakening the dollar and creating long-term financial instability. If Bitcoin does fall significantly in August, Kiyosaki says he plans to double his position. "I hope so," he wrote, clearly welcoming the dip as a chance to buy more. Meanwhile, Bitcoin-focused Japanese firm Metaplanet just bought another 463 BTC, spending nearly $54 million. The company now holds 17,595 BTC, worth around $1.8 billion, and is writing a 459% return this year. Whether the Bitcoin curse hits or not, big players are getting ready, and Kiyosaki's all in.
And here's Bitcoin to gold. You can see that Bitcoin to gold is maintaining its uptrend. We'll see if it breaks out. I think the risk-on trade has helped it recently, and we think that will be the case. When that case will continue when it is clear that we're not going into a long-term recession, that the Fed is going to ease, and that a strong productivity-driven boom, I would say, in economic growth is underway, paving the way for midterm elections that should favor the majority now. So with that, I know a lot of puts and takes, a lot of charts, but it was a busy day for sure in the markets, a lot of fear surfacing once again. And yet the way we're interpreting this is another indication that the market is climbing a wall of worry. And we need these shudders every once in a while.
Bitcoin is entering August with a rough start, dropping 5% over the weekend, a bad omen for a month that's historically tough for crypto. From $118,330 on Friday, the price dipped to $112,300 by Sunday before bouncing slightly to around $114,800. Analysts are now eyeing the $110,000 support level as a key line in the sand. If Bitcoin can hold that level, there's a shot at retesting its all-time high. But if it breaks, deeper corrections could follow. Tony Seymour, analyst at IG Markets, says the recent dip was expected and matched a logical pullback target from previous highs. He warns that broader economic factors like weak U.S. jobs data and new tariff tensions could shake market confidence further. If sentiment weakens, Bitcoin may tumble back toward its 200-day moving average around $99,355. Historically, August hasn't been kind to Bitcoin. Since 2013, prices have dropped in 8 out of 12 Augusts, with an average monthly loss of 11.4%. If history repeats, Bitcoin could slide to around $105,000 this month. September isn't much better, with similar patterns of decline. Still, there's some hope. In bull market years like 2021, Bitcoin gained in August. If 2025 continues to follow the 4-year cycle, a strong rebound isn't off the table just yet. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoinzilla for daily news, all for free. That's all for today's video. Until next time.